I'd become close with this guy, Jake, who's now my partner. And he and I were both interviewing for other VC funds. Got some jobs, we didn't get some jobs. But ultimately, during this process, we realized being a part of a big fund may not be for us. We'd be better off doing our own thing. And so kind of end of 2019, we said, let's just do our own thing. Committed to our first deal in September of 2019. Before we had a name, before we had any capital, we wanted to lead this deal. And fortunately, the founders waited for us a few months before we were able to actually fund it. December 2019, we did our first close.
What was that company that you committed to, not knowing if you'll be able to fund it or not?
Yeah, the company is called Unit.
Today we had another amazing guest on the 1947 VC podcast, a podcast for emerging fund managers. Today we had Sheel Mohnot. Sheel is the GP of Better Tomorrow Ventures. BTV is one of the top seed stage FinTech investors. They've backed companies like Unit, Chippercash, Flexport, Mercury, RAM, to name a few. During our conversation, we covered a wide range of topics. The founding story of Better Tomorrow Ventures, what is the portfolio construction of BTV, how to source and close LPs, advice for emerging fund managers on raising capital from LPs successfully, his relationship with India, what fascinates him about the Indian technology ecosystem, who is he outside of work, and much more. Now I bring you Sheel. Sheel, welcome
How
to
are
the
you?
show.
Thank you for having me.
Absolutely, it's a pleasure, and I'm excited and I'm looking forward to it, Sheel.
Me too. Yeah, we've known each other for a while now. Uh, I remember playing tennis with you, you teaching me. That was fun. Good to finally get on the podcast.
Yeah, no, absolutely. How's the backend going?
I haven't played in a while, but since then, I have been playing pickleball. Do you guys play in India?
I've been hearing a lot about this sport. Not really in India. It hasn't picked up, but it's becoming massive in US.
I heard paddle or padel, depending on how you say it, is getting popular in
Yeah,
India. It's
yeah,
pickleball is
yeah.
similar. It's like, but even easier. So it's
Yeah.
like something in between ping pong and tennis.
Gotcha. Cool. We'll do that when I'm in US next.
Great. Let's do it.
Awesome. Shil, we'll dive right into it. Shil, what led you into angel investing, and what was the founding story of Better Tomorrow Ventures? What led you to start the fund?
So what led me to get into angel investing is really, I started out on the other side of the table. I was a founder, and I always thought I want to be doing what the other guy's doing across the table. Those are the smart guys. Those are the ones who have all the power. Now, of course, I realize that actually no, the founders are the smart folks. But I think it was that thinking that maybe I'll do that in the future, be a professional investor. And then I thought in the meantime, I really love helping founders at the earliest stages. If I could help them avoid the mistakes that I made, that would be great. So I started angel investing in 2012, really, really enjoyed it. And then end of 2015, sort of beginning of 2016, I decided to do it full time, be a professional investor. First with my own money, then I raised a small fund. And then, the idea, you asked about the idea for BTV. I'd become close with this guy, Jake, who's now my partner. And he and I were both interviewing for other VC funds. So we were interviewing at sort of like funds names you've heard of. And we, got some jobs, we didn't get some jobs. But ultimately, during this process, we realized being a part of a big fund may not be for us. Maybe we'd be better off doing our own thing. And so kind of end of 2019, we said, let's just do our own thing. And so we actually committed to our first deal in September of 2019. Before we had a name, before we had any capital, we wanted to lead this deal. And fortunately, the founders waited for us a few months before we were able to actually fund it. But very fortunate that they waited for us. So then we started December 2019, we did our first close.
Got it. And what was that company that you committed to, not knowing if you'll be able to fund it or not?
Yeah, the company is called Unit. It's been a really big success story. So we led the seed then in December 2019. They raised an A less than a year later, and then they raised a B and a C a year after that. So quick, quick one, but a really good company. And I actually think that was still is actually in that fund our top performer in terms of markup. And it went from when we invested, it was a 12 and a half post. It went to 1.2 billion in just 2.5 years. So that company really helped us raise our fund because that company had done so well. People thought, okay, you guys are smart, or you know what you're doing. And that helped us raise our next fund for sure.
Man, good for you. It's almost like, just go do it and figure it out later. Just be risk on. Dang. And Sheel, so okay, you made your first commitment. You decided you're going to do a fund together with Jake. What was the next step for you? Meaning, how did you come up with the portfolio construction? The fund size, check sizes, and all that stuff.
Yeah, so we thought about like how many companies is reasonable for one of us to invest in? How many companies can you do a year? And we said a fund size is about a few years, and we think 10 companies a year is a good number. So we came up with, okay, we're going to do 30 companies. And then we kind of worked backwards on fund size. So we ended up with a $75 million fund one. And, we figured kind of 30 companies, average of maybe 1.25 first check. That gets you to 37.5 million. And then half the capital for follow on. So that kind of was simple fund math.
Gotcha. And Sheel, no, you got the fund or the portfolio construction together, and the next step for you to raise capital from LPs. How was the process like? Meaning, how were you able to source LPs, build relationship with them, and close LPs?
So I would say it wasn't easy, but it was made easier by the fact I had a previous fund, a small fund, $15 million, and the numbers were looking good on that fund. So many of almost all of the investors from that fund came into the new fund. And then also, we had some prominent FinTech folks back us early on. So just either founders that we had backed or other founders in the ecosystem who knew about us. They came in to back us in that first close. And we had one institution in the first close. It was Sandana, a seed fund of funds. And then we went out to raise more. So the first close was under 20 million. And then we thought, okay, we're going to do a second close and hopefully a final close March 30th, 2020. So it was a terrible time.
Yeah.
The world was falling apart. Nobody knew anything what was going to happen. So we actually had signed commitments at that point back out. They said, we're not going to fund you. We're not going to do this. We don't know what's going on in the world. So we kind of had to start over. We told our LPs that came into the first close, okay, we're going to have a smaller fund, but valuations are going to come down, all this stuff. Of course, none of that was true.
Yeah.
We, a couple of months later, of course, the money printer was on, interest rates were declining, and so there was more money in venture than ever. And so then we closed in, I believe, August of 2020. And our target was actually 60, but we went to 75. So we went to our hard cap.
Gotcha. And Sheel, in the beginning, you said it wasn't easy, right?
Yeah.
And it seems like you had the solid track record. You had few people who were ready to back you, and then you were able to build, signal as well by inviting solid fintech, founders or fund managers. Was there an inflection point while fundraising, Sheel, that sort of like just helped build the crazy momentum?
Yeah. So, I mean, the only inflection point I can think of is really a macro one. Like it was a crazy time, right? 2020 was just wild. And the macro one was in May, just like things changed. It went from completely off from an LP perspective to completely on. And during this time, a lot of folks came back to us and said, even folks who had said no to us earlier came back and said, actually, we'd like to look at you guys again. And I think, to one of your points, having closed some capital was really helpful and continue to make investments. And then I think kind of building a reputation. Like our companies, I think were seen as being good companies. Even those first few that we'd invested in, they were a couple of them were contested, like multiple parties were interested. So we had a story that said, "Hey, we're beating these other guys out there, even though we have no name, we have no nothing, we don't even have a website. We had a Notion page." Um, with your fun side story, we had a Notion page as our website for over 2 years, more like almost 2.5 years. And I was at dinner with our founders last week, and they said, yeah, it was like really embarrassing for us. We had to tell, we didn't, people asked us like, who are your investors? And we couldn't give them the website because it wasn't even real website.
No, I think I've seen the Notion doc website, Sheel. In fact, I've taken inspiration. I have a Notion doc. I don't have a website yet.
Your Notion doc looks better than ours, though. Uh, ours was so janky.
Uh, and Sheel, there are times, let's say you're raising a fund, and you have a portfolio construction in mind. You've figured, okay, we're gonna have this fund size, maybe 30 mil or whatever, 40 50 mil is the fund size that we're gonna target for. How do you decide when to do the first close and start investing? And where I'm coming from is, let's say you just don't know if you'll be able to reach the target that you're looking to raise.
Yeah, so I mean, for us, I think what we had heard was you want to raise like 50% of the fund before you close. I don't think that makes sense. I think close if you have like 20%, 10% even. And I think the reason for that is they want to know you're legit. And there's so many funds out there that don't even get to a first close, that just by getting to a first close, you've got some legitimacy. Having some companies under your belt really helps. And those first few companies we invested in, they did a ton of calls for us. On our LPs were calling them, why did you choose these guys? And that really helped. So I would say do a first close as soon as possible and start investing and have the companies, be your voice.
Gotcha. Have the companies vouch for you. And Sheel, you said there were some LPs that came back to you and they wanted to take a relook and they ended up investing. Was there a process that you were following, meaning you were updating them with LP updates? How are you still keeping them in the loop?
Yeah, we were keeping them in the loop. I think, well, the ones that said no, I don't know if we were keeping them in the loop, but there were other ones who said, maybe not now, maybe later. And for them, we would send them our quarterly updates and also just keep them warm and say, hey, we're open to chatting anytime, or if you're ever looking at a fintech company, reach out to us, that sort of thing. And so we built some good relationships that way.
Gotcha. And Sheel, your first fund was 75 million. Second was, 25, 225, combination of both pre-seed
Yeah.
and then doubling down on your winners. Were there lessons that you learned while fundraising for Fund One, and you were able to implement those lessons when you were doing your Fund Two?
Yeah, I think in fundraising, right? So I think fundraising for Fund Two was unique for us in that timing, was everything. We raised in December 2021. It was peak market, and um, we had a very easy fundraise for Fund Two. Uh, and what happened was we had our LP meeting in October. We told our LPs we're going to raise in 6 months, something like that. And many of our LPs, it was a different time, 2021. our LP said, okay, we're ready to sign now. So we said, okay, let's just put together the paperwork, see if they want to sign, they can sign. And pretty quickly, so I think we gave them the paperwork in November and then said, any existing LP will get first dibs on allocation, and new LPs will have to, we'll see if there's room. And a lot of our Fund 1 LPs came back with much bigger commitments than we expected. So folks who had invested 1 million in Fund 1 came in for 10 or even 15 million in Fund 2. And that happened a bunch. So our fundraise was just very quick and easy. Of course, it's still a lot of herding cats and getting the paperwork in, but mostly kudos to my partner Jake and our CFO Todd for making that happen. For me, it was easy.
Gotcha. So, really your portfolio companies helped you fund too, and then of course, the timing was there as well. And Sheel, a emerging fund manager looking to, raise a fund, his or her first fund, an advice that you would want to give them when sourcing LPs, or I will talk about like how to categorize, how to think about, how to go about it when fundraising from LPs.
Yeah, so there's so many different types of LPs. There's
Yeah.
high net worth individuals, there's family offices, there are fund of funds, there's endowments. Each of these is different. And then there's some, like within fund of funds, there's a lot of similarities. Within endowments, there's a lot of similarities. But with family office, every family office is different, man. You think you've seen one and you've only seen one because there's not much similarity amongst them. For us, we have a little bit of every different type. We have a lot of fund of funds. So our LPs are Greenspring, Sandana, Invesco, Vintage, Sapphire, Franklin Park, Hummingbird, uh, and maybe I'm missing one or two. Those are all fund of funds. Then we have Carnegie Mellon University, which is my alma mater, and then we have just a few family offices that we really like, and that's sort of our composition. I think getting them is, you have to get introduced, and they have to take you seriously because they have to want to take the meeting. So for us, look, we sent a blurb with a link to a teaser deck, and every other VC we met, we said, "Hey, are there any VCs in your portfolio or any LPs in your portfolio that you think would be a good fit for us?" And people made wonderful introductions. We met folks at other events, that sort of thing, and it went well. And in
Gotcha.
terms of I think your question was about advice, right? Advice, Fund 1 to Fund 2. Um, I think the number one thing is we had, when we met a fund of funds, let's say, we would have our other managers that we've co-invested with that know that fund of funds send them an unsolicited note saying, "Hey, I sat on a board with Jake and he was incredible. You should really consider backing their fund." Just sending that note really helped. And then we also had some of our best founders. So like founders of, a unicorn would unsolicitedly email our a fund of funds that was thinking about investing in us, and they would just say, "Hey, I caught up with Sheel. He told me he's talking to you. I want to let you know this is what these guys meant to my company." And that really went far. I think that really helped us out.
Gotcha. So mostly it's about founders, great founders, successful founders vouching for you can really add weight. Uh, and Sheel, you said you would share a link to the blurb of your pitch deck while you were fundraising. What, or let's say, maybe you want to quickly summarize. Here are a few things that we've really focused on. This is what these LPs are looking for. Portfolio track record, team, and vouchers or testimonials from founders. What were those things? And did you change your deck over time as well? Meaning, did you iterate over time from the feedback you were getting?
Yeah. So first, okay. So what's in the blurb? It's just who we are, what we're doing, why we're doing it, and who we are includes our track record. So that's kind of it. I would say probably 5 to 8 bullet points, something in that range about us, and then maybe a 1 or 2 page deck. Um, and I think that was enough to tease folks into getting the meeting. And now you asked about the deck. Yeah, the deck is always a live document. I think you always got to iterate. We didn't change anything huge too much, but like we probably went through 20 plus different iterations of the deck at some point. So you got to iterate and find, you know, get to a place where you feel really comfortable.
Yeah, gotcha. And Sheel, man, what's your relationship with India?
Yeah,
You've made one or two investments. Maybe just give us, what's your relationship with India?
yeah, absolutely. So my family's Indian. I grew up in the United States, but both my parents and everyone else in my family grew up in India. And we're Rajasthani. My mom grew up in Nagpur. My dad grew up in a village near Jodhpur. And then they both came to the US in the 70s. And I was born in the United States. But I spent a lot of time in India. Growing up, spent many summers in India. And then as an adult, I chose to move to India. So 2006, I moved to India for a year and worked in microfinance. So I was living in Ahmedabad, but working in microfinance and living like a borrower. So my salary, and this is all I spent was 2,000 rupees a month. Um, so really, not a luxury lifestyle as you might as you might guess with that salary, and that's all I spent. Um, it was tough, but I feel like I learned a lot about India during that time. It was a remarkable time. I learned a lot about myself as well. And so I've always had a soft spot for India. I go almost every year, and I expect that to continue. So naturally, we have made some investments in India. I think we've made five out of BTV one and two, and always looking for more. I think we're fintech investors, and I would say recently there's been a lot of there have been a lot of changes in India that have made it sometimes more difficult for fintech companies than it was before. And there, I think about a few things. I think in India, how you make money in fintech. There are a bunch of different ways that you
Hmm.
can make money. Number one is charging the customer, and in India, there's no consumer willingness to pay, and not a ton of business willingness to pay either. So that sort of charge for SaaS model in fintech in India is not that good. That's number one in the United States. Number two, best way to make money in the United States, payment processing. In India, because of UPI, it's great for consumers, but it's not a real strong way to make money in India either. Then here, there's you can make a AUM percentage of AUM,
Hmm.
and in India there are some models like this, but not many, and the dollar amounts are small as well. So then it comes down to how you make money is lending, and at the end of the day, most fintech companies in India are lenders, and I've always struggled with lending personally as a model, particularly a model for venture capitalists. And the reason is in lending, you're giving out money and then getting it back. And venture capital is all about growth. I look at a line and expect it to continue. And growth can be manufactured when you're giving out money. You can give out bad loans and you'll grow faster than your competition. And it's not like always that'll be seen quickly. It can take time. So that's part of the reason that I think lending has been tough. Another reason is, you raise debt capital, but oftentimes you need to raise more equity capital to unlock that debt capital. So you're always kind of in this cycle where the amount of money you raise, uh, part of it is set aside for the debt. So,
Mhm.
because of that, lending has been a difficult category for me to invest in. And so I think about India, and I think many of the key ways to make money are not there in India, but still you have good companies. Um, so where we've invested recently in India have been companies building in India, but for a global audience or for a US audience. So the last two of the last three companies we did were one building for the US, one building for the globe, and the third one is building for exporters from India.
Gotcha. And Sheil, it seems like it's mostly a function of the increase in GDP or per capita income in India. Once it reaches there, then it just opens up. That first point that you talked about, consumers would start be willing to pay in India. You know,
Totally.
I, I would ask you, like, what's something that fascinates you about Indian tech ecosystem. You can maybe talk about in particular about fintech that you haven't seen anywhere else in a good way.
Yeah, I think there are just different models that work in India. And if I think about a lot of the developing world just copies models that start in India. And uh, and sometimes it's good, sometimes it's bad. So, the Kata book started and got a lot of great early traction. And then all around the world, like I must have seen 30 to 40 Kata books for, for Vietnam, for Indonesia, for Mexico, for Colombia, for Nigeria, for Kenya, all of these. And in each of these markets are multiple. Now, we don't know if any of them are going to work, to be honest. But, that's an idea that starts in India. Many, many, many other models like that uh, start in India, some B2B marketplaces, some education stuff. And I think it's pretty cool. The rest of the world looks to India. One other thing is the rest of the world looks to India so much that even outside of India, in some of these emerging markets, we have great founders that are Indian founders or other folks who've lived in India, kind of learned the ropes of building in a developing economy and then went somewhere else.
Gotcha. Seems like India is setting the trend that other
Yeah,
emerging markets are following. And Sheil, since you are a global fund, you're investing in a bunch of different geographies. Do you think sometimes the models that have worked in India is helping you evaluate and invest in companies elsewhere?
for sure. Yeah, I think learning from what's happening in India has been super helpful. I'm fortunate to have, folks on the ground I can rely on, like you, to tell me what's happening. And so I've definitely used that to my advantage. Like we invested in a B2B marketplace for construction materials in the Middle East. And I called on our friends who are investors in Inframarket in India. And I
Yeah.
said, hey, like, what's it like building this business? What can I learn from them? And that those learnings were super helpful.
Gotcha. India has also become a place where one can learn and apply those learnings in other sectors or other geographies. So Sheel, my co-pilot is sort of, is impatient now, is bugging me. He wants to get in, and he's asking, he's saying, "Man, this guy Sheel, he has, bunch of different personalities. He's doing bunch of different stuff. He's an investor, is his own shows and bunch of other stuff. He's trying to understand if, let's say, Sheel, money and attention are not needed anymore, and you're not, at BTV for the time being. What would you work on? Who would you be?
Hmm. First, I would say I love this job. So I know I'm not answering the question directly right now, but um, this is not a job I'm doing for the money. This is a job I'm doing because I'm passionate about it. And I think you probably feel similarly. Like this is just I couldn't not do this. I love it. I love helping founders, and most of the aspect of this job are things I would do for free. Um, Now, to answer your question, what would I be doing if not this? I think there's a bunch of different things. I think probably I would move to some place where life is cheaper than San Francisco and just start a bunch of businesses. I would probably try my hand in the restaurant space. I would do a bunch of other stuff like that. Um, I'd like to think I'm creative and could try to do something creative, but probably not realistic. I did recently act in a movie though, but it's not winning any Oscars or anything like that. So I don't think that's the path for me. So I think I'd find random stuff to do, but one idea would be to start a restaurant.
Gotcha. And one thing that amazed you while you spent time with Brian of Airbnb that you had not expected.
Yeah, so the context is I stayed at Brian Chesky's Airbnb, the CEO of Airbnb's, hosted me at his house. And he was there the whole time. So it was, he was in the other room, I was in one room. And we hung out the whole weekend. And that actually surprised me. I didn't expect this guy's going to take his whole weekend out to spend time with me. That was amazing. Um, but also how open he was about the business. He was totally open about this is what worked, this is what didn't work, this is when I was not doing well, I was depressed, this is when I was like, this is what really worked for me. One of the coolest things is they have been through a lot as a company. And it started out in, I mean, one of the big challenges was at the beginning of the pandemic, right? Like all travel stopped and they had to lay off a ton of people. And I think they had 7,500 or maybe even more than that employees back then, yeah, three and a half, 3+ years ago.
Hmm.
And they had to do these layoffs, and layoffs are never fun. But actually, what has happened is they did layoffs during this time. Everyone else increased incredibly. So every Silicon Valley company got really bloated during this time. But because of COVID, Airbnb wasn't able to get bloated. And then they went public and they've actually continued to trim the staff. And now they're at 5,000 people. And they're operating better than ever before, super efficient. And one of the things he said was like, he feels better about the company as a leaner company. And I think a lot of companies are bloated and will need to get better. And I've seen it in my own portfolio too, that we have companies that had too many employees. They, over time, got rid of a bunch of them. And the companies are operating at a level better than ever before.
Gotcha. I love it. And Sheil, if you could invite three people, dead or alive, for dinner, who would they be and why?
Okay. So I would say Steve Jobs, Walt Disney, and wild card Benjamin Franklin. So I think they just each in their own ways changed the world uniquely in ways that are still very much top of mind for all of us. And I think just had an incredible imagination and an incredible way that they ran their companies that I'd love to emulate.
True. And Sheil, one Indian that you would really want to get to know, probably hang out over dinner or drinks.
Dead or
Could
alive, or
be entrepreneur, could be entertainment.
whew, I mean, on the entertainment side, uh, I've always loved Amitabh Bachchan, so I would love a chance to meet the boss. Um, I yeah, Amitabh would be great. Just what he's seen over time, became really popular. Popularity declined and came back. That would be really cool. Um, I think, there are a number of founders I look up to in India that I have gotten the chance to speak to. But outside of that, I think uh, entertainers, Amitabh, and then maybe I've always liked Amir Khan, and I'm also a Shah Rukh Khan fan, so all those guys would be great.
Gotcha. Yeah. Well, I mean, Amitabh, is a definition of how to reinvent yourself. The guy is just always coming back. Sheil, my man, thank you so much. I had so much fun. Thank you so much for doing this.
Absolutely. I really enjoyed it, man. Great to see you. Great to catch up as always.